Hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another binary options strategy, binary options trading, IQ option strategy video. Those kind of videos which I'm doing almost on weekend when the market is closed. Yes, we got now holidays. Yes, so I was not able to do other videos, and so I'm doing this deep educational videos where I'm going to show you based on those kind of trades which I have already done. Yes, why I took those trades, what kind of concepts are important of the ebook to understand those trades, yes, and what you should do to avoid out of the monies, yes, based on those kind of concepts. In general, I get almost often the question how to join the BOTT mentorship program. And to join the BOTT mentorship program, watch first of all the BOTT mentorship playlist, yes, so that you get an overview about what you can expect. And there is also explained how you can join. Send an email to my email address, yes, boturbotrader@gmail.com, and with the subject BOTT mentorship program, and then the application process will start. Yes, the application process is for free, so you can get out of the application process by your own at any kind of time. Yes, or you get rejected if I see that you are not able or you have not the required knowledge, yes, to join the BOTT mentorship program. So okay, that was this one. This kind of video is based on those kind of concepts which I have explained in my price action guide and in the price action bible. Yes, you find both in the description. This kind of ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook. Yes, you can find the link in the description, and in the description we'll find also the link to the Facebook group. Don't miss it, join it too. So okay, let's see. I want to do a fast overview of those kind of concepts which you should know, which are almost important and which are also important for this kind of video, and those kind of trades which I have explained or which I will explain in this video. Yes, and that are those kind of concepts which I'm naming now. First of all, all the candlestick patterns and all the chart patterns should be you should know them inside out. And then a part of the candlestick pattern and chart pattern which I have explained in this ebook, yes, you should also know those kind of concepts which I'm naming now. Yes, and that are those one about the candlestick math, yes, the candlestick math, the four keys, yes, the trend, the key level, the candlestick pattern, and the rejection, the market condition, because every kind of candlestick pattern and chart pattern behaves different in different market conditions, yes, and so it's important that you can recognize the market condition, yes, so that you know what kind of trades you should trade at this kind of different market conditions. The importance of the major trend and the minor trend, yes, and again those kind of concepts which I have explained here about the fake breakouts. You will see that the fake breakouts are not only a good opportunity to trade if you are if you have the basic knowledge about support and resistance, yes, that are also that are not only tricky, they can be used in your advantage, yes, because they will point on support and resistance. And you will see also in this kind of video how important it is that you understand all those kind of different fake breakouts, yes, which can occur at any kind of support and resistance level, yes. Then a reversal and retracement, that you understand how a reversal looks like in comparison to a retracement, yes, that is also important. Also this also this will be in this kind of video. I will show you this later, how you can distinguish a reversal from a retracement. And then obviously the highest probability trading setup, the high probability technique, this one where you trade one second. where you trade. So where you trade the reversal candle, and after the reversal you wait about continuation. And after the continuation, yes, you wait for a confirmation that there will be a continuation, and then till you get another reversal pattern, and then you trade it. This is something like a program flow chart, yes, and you can get with this kind of techniques, yes, a lot of opportunities in any kind of time frame. Yeah, it's really important that you understand that you need only to wait to get a confirmation, and then you trade in the trend continuation, yes, or you wait for a reversal pattern at the end of a trend. Yes, you need a trend before. That is this error. You need a trend before. And after this trend, you get a reversal pattern and any kind of key level, yes, here key level, yes, then you can trade the continuation and so, or the reversal. That is really simple, yes, and almost often with the 4 keys, the trend, the key level, the candlestick pattern, and the rejection. So then important too are those kind of concepts which I have explained here. Let me show you this, the support and resistance stuff, which I have explained here, because everything is only working with support and resistance. This is really important. Yes, if you have the 4 keys together, the key level, the candlestick patterns, the trend, and the rejection, you have almost a good trading setup. And the key level, yes, the support and resistance levels are one of those kind of things. So then you have to understand the minor and the major support and resistance level, and how you do your trades on the major support and resistance. Don't do trades on the minor ones, because on the minor ones you will get mostly out of the money, because those ones will often broken, or there will happen some kind of fake breakouts, and you don't get a good entry point. So then the change of polarity, which confirms your support and resistance level, which can be then traded, yes, because resistance becomes support, support becomes resistance. That is what the market is about, yes. And then obviously this one, which I'm using almost often, that are those kind of concepts about how to draw support and resistance. Yes, I do not draw them, I know this already, yes. On candlestick patterns, yes, every upper shadow, every upper wick, every upper tail is almost, and lower tail has almost is doing almost resistance or support, yes, depending. So these are ideal ones, yes, that is only here for inverted hammer. That's a shooting star. But this can be used for any kind of gravestone and any other candlestick pattern. And you see here we have a dark cloud cover, or the bearish engulfing candle. You see that it's a reversal pattern, and every reversal pattern, yes, has at the upper shadow or the higher high resistance, and on the lower low, yes, support level. Yes, that is what every kind of candlestick is about. So then I would say that was it already. The other ones are also important, but it would make it too big, this video again. It's too long, this video, but I have to show you this kind of concepts. If you are using the EMAs and the Bollinger Band, yes, then you should know this kind of things which I have explained here. How to read the Bollinger Band. Bollinger Bands explains the rules for Bollinger Bands, how to do your trades, surfing the trend, pullback trades, fake breakout trades, yes, and all those kind of things in the different market conditions which this kind of Bollinger Bands are telling you. And here the breakout expansion, yes, can be traded also, because somebody asked me this. I don't know who it was, but somebody asked me this, how to trade also, if you can trade this not only on the 2 deviation, you can trade this on every kind of deviation, yes. Also on the 1 deviation, you can surfing the trend on the 1 deviation, because price will then move between the 1 deviation and the 2 deviation, yes. And that is the same what I have shown you here, yes, because part of the trend, yes, is also the trend channel between the 1 deviation and the 2 deviation. So here I explained exactly on what kind of market condition you should focus on what kind of trades. And the same is valid here for the EMAs, how to read the exponential moving average, but that can be every kind. The simple moving average, the weighted moving average, every kind of moving average. It's not only the exponential moving average, yes, because those rules and those things which I have explained here are valid for everyone. They are explained in detail in the Price Action Bible and illustrated in the Price Action Guide. Both can be found in the description, yes. And yes, okay, that is this one. So, okay, and I would say we can start now with the video which I have prepared to show you the deep insight of those trades which I have done. Let me take the video. So I have prepared it. So here is the video. And yes, and the first thing, I entered already into a trade here. Because I'm doing almost often in the beginning the introduction to the ebook, and that was the reason why I have done this trade and I have done the introduction to the ebook, and at the end we are here now in the last 20 seconds. So I have drawn here support and resistance. We have here nothing else than a ranging market. You see here the 200, the 100, the 50 and the 20 are almost flat. What does it mean? That means you should try to focus your trades at the edges of the Bollinger Band. Yes, here we have the edges of the Bollinger Band. Here we have the edge of the Bollinger Band. Yes, also the one deviation is also valid. This is what I have explained in detail in the ebook. Yes, really in general. So, and then after price hit again this level, that is another thing. We have here a slightly downtrend. You see the alignment, the 200, the 100, the 50 and the 20. And as soon the price touched this support and resistance level, which was based on the change of polarity, you see here that are those concepts which I have named a few seconds ago. Yes, here we have support, here we have resistance, here we have also a doji which confirms this, yes, and here we got a breakout of it, and after this breakout we got here this candle which confirms the major support and resistance level, and after this candle touched this level and got a rejection from the 20 EMA, I entered here into a put. Yes, really nice, because the closing price was here. So I entered also about the concept about the entry point above the closing price of the previous candle into a put. Yes, expecting that price would continue to going down. Yes, so okay, that was this to the market condition. And I will start the video now. And yes, and let's see what's happened here. Yes. You see price is moving down, yes, but because we have here ranging market, I would not expect that price would close at the bearish candle, yes, because that is what I have explained in so many other videos, that mostly because of, okay, you see, so because of, we have ranging market, price starts often doing this kind of retracement. You see here, retracement, yes, retracement. Almost often retracement and consolidation, and that is due to the ranging market. Yes, ranging market is often so that there will be such kind of things. That is also the reason why so often dark cloud covers engulfing candles do not unfold like you expect in a bearish or a bullish candle. Then mostly there will be an opposite candle, only because of this ranging market, yes, and that is why you should try to get the best possible entry point above or below the previous candle closing price. So you have seen what I have done here. So I have seen here, look at this. That is also because I get almost often the questions about the entry point, how to do the rejection and then the entry point. You see, so look at this. The movement was easy. So first of all, price moved up. As you see here, first of all, price moved up. So let me see here. So you see price moved immediately up. Yes, really up. Yes. And most of you would enter now in this upward movement, yes? That is wrong, because if you would enter in this kind of upward movement, you will get mostly out of the money, yes? Because you would get the worst entry point ever, yes, because price mostly, if it moves in the purchase time in one direction, it will retrace back in the expiration time, yes. Also, if it's doing this now, yes, it is really tricky, and you have to be careful not to enter into the first movement. You have to try to get almost the best entry point, which is almost close to the previous candle closing price, yes, or below or above. Mostly you are not able to do this, that you enter above or below or above the closing price of the previous candle. But this should your aim. If you are not able to do this, try to get at least as closest as possible to it. So I'm doing here nothing else than a put, yes, because I understood that price will reverse from this level, yes, or retrace from this level, because we have ranging market, yes, we have ranging market. This candle here was a huge bearish, huge bullish candle. And you see here the fake breakout. Look at this. You see here the fake breakout, which is exactly this kind of evening star fake breakout, which I have explained in my ebook. Yes, and this fake breakout is showing you here a support and resistance level. And this concept here, I entered into a put trade above this support and resistance level, yes, because of this fake breakout, which was showed me that we have here exactly on this level support and resistance level, and that was the reason why I entered, and that's the reason why this candle closed also below my entry point, because of this. And this candle is showing me that we have here, and you see also from the movement of this candle, that this will be here only a retracement. I would have expected some huger bearish candle, but this candle was a weak candle, yes, and it shows me with the upper shadow that price that price tries to push up further against the 200 EMA, yes, and that was the reason why I entered then below the previous candle closing price into a call, yes, into a trend continuation, because I understood immediately that we are getting here into a trend continuation, that this candle was only a retracement and not a reversal, and that only because of first of all of this support and resistance level, yes, and second because this candle moved up further, yes. So, and then now after this I would not enter anymore into a call, yes, because we are still into a ranging market. We have here the range. This is a trading range. We reach the trading range. We have here a lot of selling pressure due to this kind of candle, and that would be the reason why I would not enter into a call again, yes, because we are too close to the 200 EMA. I would either expect that there would be another retracement, and after this, if the price would continue to going up and showing me momentum, upwards momentum, I would probably enter into a call, but not immediately after this engulfing candle, because this would be tricky. A lot of traders would enter after this into a call, and they would get out of the money. First of all, this candle should have to touch this 100 EMA, yes, I have explained this, and I will explain this in the next video again, yes, how this concept is working. First it has to touch the 100 EMA, and after this it has to go up, yes. If it's opposite, yes, if it moves first up, yes, then I would not enter into a call, or I would enter only into a call if price would come back and getting below the closing price of the previous candle to get the best possible entry point. So that was already. If you like this video, do a like. If you didn't subscribe to my channel, and if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.